I'm Epstein, and here we are with your Spider ETF stock market wrap-up for Thursday, the 16th of January, 2025, just after 7 p.m. You know, anything you're going to do now, you're at the mercy of President Trump's inauguration day and the bills that he signs right after that. We're seeing how the vetting of the cabinet's going, and as you can imagine, these people are going to be loyal to the president, and they're very much of the thinking he is. Why would he bring anybody else in that's not like that? And he's done exactly that. It should get very interesting. Don't try to make more out of it than you can, because you can't. Let's see what these tariffs look like and make a decision afterwards. That's the way that I'm going to approach the market. Housing starts and building permit data come out in the morning. Your Federal Reserve, they're coming out with their monthly industrial production and capacity utilization. We've seen bank after bank come out, and as a whole, they have beat big. And that has helped the marketplace without any question. They're on the right track. And obviously, high interest rates have helped these banks as well as trade. They're doing excellent there. Merger and acquisitions. And now they're going to get rid of Gensler. They're going to get a different look from the FTC. They're going to get all these governments that are now, wherever Trump can place people, to be more pro-business. That's the way you have to approach the market. So it's going to be 4 years of less regulation, 4 years of very pro-business. And now the question is, how do we cut spending? I know you think I'm crazy when I'm saying it. Somewhere along the line, somebody in America has to stand up and say, we have to cut spending. I don't know who that's going to be. Maybe it's Musk with his new dog, you know, DOGE, that the Department of Government Expenditures or Savings, whatever he wants. It's crazy. But let's hope he can do it, all right? We need it, and we need it in a big way. So what I'm trying to say in the nicest of ways is be careful right here. You're coming into a Martin Luther King Day, you're coming into inauguration on the same day. Limited trading hours in the futures markets will impact everything that's happening. So be aware. You know, you don't necessarily have to take a lot of exposure you can't control. And I don't know what the market will do off of that. You can see that you've left the bear market in TLT. I mean, it was just a jump up yesterday. And as I said, when that occurs, you catch people, short sellers probably buying their way out of the market right through here. The pattern is bullish. You now have higher lows, higher highs. You have an outside day up. That is a continuation pattern of this until this low is taken out. If it's taken out tomorrow, then this is false and the market could fall right back on you. Where's the market resistance? Right where I often see it, the 18-day average of closes, the first resistance point. If it were to get a monster rally, could you go up there? Of course you could, but that's going to take interest rates collapsing. Why would that be happening right now? More likely, if you can mount a rally here and get short covering, then maybe you're coming up here. It was interesting to see Fed Governor Waller today. I believe it was on CNBC. I watch so many stations. I have monitors everywhere. I'm watching it and I'm going to myself, I'm listening to him. He thinks 3 rate cuts are very much live for this year, very different than what the marketplace does. And he thinks that we had that September, October period of inflation bump, but now he believes that with seeing these core PPI and CPI numbers, what's coming in, that we're back on to the threshold of down. He may be right, because let's face it, when you get up to 4 3/4, near 5% interest rates, whatever the Fed does it really matter? What really matters is what the marketplace is doing, and that slowdown of money and how businessmen look at that and how the average person looks at it. I like that people are looking and saying, how could they allow credit card companies to be charging 21 to 28% on their cards? Well, people don't understand. Without them doing that, how are they going to pay to run their business to a degree? That doesn't mean they don't make profit. That's not what I am saying. But what I am saying is you've got to take risk in order to do it, because there's a certain amount of not good risk. That's going to be looked into, though, and there may be caps that come on that. Don't be surprised. They're going to look at that hard. When you lost the bearish embedded momentum, you went right back to the 18-day average. And for the moment, that's where you're stuck. BROS tried to get away from the upper Bollinger Band, couldn't do it, came right back at it, still overbought, still very much in an uptrend, hasn't come back from that. And what I told you yesterday, I still see in CrowdStrike. One of these, just up and down like that. And that's what I think you're going to be looking at. Rivian today was interesting. I think that professionals were buying today in the 1405 area, probably putting stops right under the 1301. And if the market gets the number one, if the Biden goes out with making sure that this loan is in place for Rivian and it doesn't get undone right away by Trump, all they got to do is meet targets, and they got $6.5–7 billion of money for that Georgia plant. So market, I think, is paying attention to all that. In KWEB, I can make an argument now to get back to the right here, the 200-day average and the 18-day. That's where I think the market's going to try to go, 28.51 to 28.93. You're at the first level of that now. So be careful. You're right. Did I say 50? 51's the close, 28.93 to 29.18. So about 60 cents higher, 50 cents higher is where I think the market can go. I got the numbers wrong there. In Toll Brothers, fighting at the 200-day average in the Bollinger Band, overbought. For me, I'll let somebody else want to own that at that resistance point. XHB, same thing. So that doesn't mean you can't go higher and later, but you've used a lot of energy to get up there. You're already overbought. You got to prove that the market wants to and can accommodate those prices on it. In the end, at today, average from Fannie Mac, they said their survey, mortgage rate 7.03% for a standard 30-year fix. That's a pretty high number, but people, I guess, are buying homes. Lower low and Zoom. Just like the banks took off, that's what's happened in the financial services as the numbers have all come out and put that together. The industrial select looks good. It's not everywhere that it's looking good. You know, we saw the Empire State look rocky, yet the Philly Fed business area, whoa, on fire. Their numbers today came out really phenomenal. And don't be a wise guy in energy. You've got cold. You've got Russia under sanctions. The Trump administration's going right after Iran. They're not pulling punches. They mentioned that when Trump left office, they were in single-digit numbers of getting oil out on the market. And under Biden, it went up to 1,700,000 barrels a day. They're going after that production. They can't stop the production. They can stop it hitting markets, and that's what they're going to try to do. GLD, market's looking still at inflation. Nobody's mentioning how to cut expenses. Everybody that I'm watching, and I'm watching these, I need a break. I either watch the Mecum auction from Kissimmee, where I see the cars. I'm a car freak. I love it. And that's my break. I'll turn on the Senate hearing. That's another break. And then I go back to the markets, do what I do, take a walk, come back and do my things. Nobody wants to sit in front of a screen. I get up 4 a.m, so it's a long day. And here it is, 7 at night, and I'm still at work. SLV, you can see the 100-day average, the upper Bollinger Band. Okay, market's fighting a pretty good battle right here, but all the metals have come up, even the copper market, but they're all into resistance points. Resistance points can be broken. You can keep going, but they got to prove they can do it, and I don't know that you can in this market. BND, a heck of a rally like TLT got. Dollar index, remember when we got back here, I said this is going to be your battleground. It fits right in with my dollar report that I just did. FXE, still in a downtrend, could be going back here. I'm one of the guys that still thinks parity, US dollar to the euro this year. So I'm still there. I'd have to have reasons to change, and I haven't seen them yet. I keep looking for them. So we'll talk about all this and more first thing in the morning. You have yourself a great evening, and I'll catch up with you then. Take care.